Hey everybody, what is going on? It is K2 Investing here, coming at you with another video focusing how to beat the market, especially when it's red. All right, when you're just starting out, the market is very overwhelming. It's emotional, you get scared about losing money. All these factors come into play, all while trying to learn. And it can make it very, very difficult to make profit in the market when you have all those factors involved. Okay, when it comes to trading, there are three main different types of trading. Okay, you have day trading, which is buying and selling a stock in the same day. You have swing trading, which is buying a stock and then selling it in mind that it's going to go up over the next couple of days, couple of weeks, or couple of months. And then you have long-term holding, which is buying a stock with no intention of selling it over years to come, okay, and trying to collect those dividends while you're holding that stock. So for an example, we're going to go into Starbucks here, and if you look at the one day here, so say for day trading, one thing you would do is you would see this dip here right at the beginning. You would buy as much as you can in a lump sum and then sell a lump sum as it goes up, right? So it's all about timing the market, and the same thing with swing trading. So if you look at a 3 month, say you see this dip here, you buy and then you wait for it to go up over a month or so, and then you sell again using a big lump sum to try to get as much profit as possible. When it comes to long-term holding, if you look at the 5-year chart here, you're just buying randomly, you're buying, and it's just consistently growing. And so you're going to make a profit. And then also Starbucks does have a dividend yield of 1.63. So as you're holding, you are going to be making money regardless by collecting those dividends. One of the best ways, in my opinion, for when you're first starting out and you're learning how to trade in the market is to think long term, okay? Because of all those other factors I mentioned before, the emotional side of it and everything, it makes it very difficult to try to make money. Because honestly, when you're first starting off in the stock market, your goal shouldn't necessarily be to make money, but to learn how to make money, all right? And it takes a lot. I'm going to be real with you. I've been doing this for about 3 years now or so, and I've made my fair share of mistakes. You will too. And that's honestly the only way you can really learn, is to be willing to make these mistakes and to take emotion out of it. And one of the things I can tell you for sure is when I started, you can see right now my portfolio is down $248 in one day. Last week I posted a video of my account being over 17K. Now it's 16.7. If this would have happened when I first started trading, I would have been losing my mind. I'm like, oh my God, I just lost $250. This is insane. This is crazy. But as I've learned how to trade in the market, what it entails, I'm not even losing a second of sleep over this, okay? Because I understand the different parts of the market. And a huge thing that has helped me is a strategy called dollar cost averaging. All right, now this technique is putting in a consistent amount of money into a stock, an ETF, or a mutual fund, regardless of the actual price of the stock at that time. Okay, so for example, let's say every week I'm putting $100 into the market and I want to buy Starbucks. All right, $100 every week. So if we look at the 3 months here, say at November 20th, I put in $100. Okay, that's going to buy me a stock of around $83. And then in December, $84. Okay. And then January, 87, and then here into February, it's going to be 84 again. So every time I buy, it's going to be a different price. And what that's going to do is that's going to change this average cost right here. All right, so regardless of what the market is doing, I'm consistently putting money in, right? And that's changing my average. That's adding more shares to my overall position, which is adding more dividends. It's bringing all of that money into it, and because we know that Starbucks has consistently been green for at least the past 5 years, that I'm going to make it out okay, right? So the many benefits of doing dollar cost averaging is you have to avoid mistiming the market. So all the emotion that goes into being like, all right, I'm going to buy at this dip and hope it goes up. Well, what if you buy at this dip and instead it actually keeps going down? That's going to put a lot of emotion into it, and it's going to discourage you, and it's gonna make you almost want to quit. I mean, there's plenty of times where I was investing in this market and I was like, this is too much, I can't do this, I'm just losing money. But in reality, if you do the dollar cost averaging portion of it, you're gonna eventually make money as long as you pick proper patterns within the stock, you know. So here, Starbucks, yeah, it's green, but say you pick something lame like I've done in the past, like I think I've used this as an example before, where it's all red. Oh, okay, there we go. It's, you know, it's like, okay, well, that was my bad. I probably shouldn't have gotten into this stock. So of course, you know, I might lose money, but that's a video for another time that I will be posting about the different patterns to look out for when you are investing. But again, the benefits of dollar cost averaging is not only putting a consistent amount of money into the market, but also being able to avoid mistiming the market, which takes the emotion out of it, and it helps you think longer term. And again, thinking longer term gives you the ability to learn how to trade in the market while still sort of making money, right? Because, you know, at least you're still getting your feet wet, you're still getting the feel for it, you're still able to essentially make mistakes and learn, but you're not making huge mistakes. You're not putting $10,000 in, putting all $10,000 and hoping to make a fast return, and it actually goes down, and now you don't have any money to try to average your price back up again. The two main downfalls to dollar cost averaging is brokerage fees. We don't have to worry about that with Robinhood, thankfully, but depending on which brokerage you use, it does cost money to buy and sell, so that could be an issue. And also, again, if you're trying to make those short-term goals of making big profits in a small amount of time. But again, as a beginner, I do not, in my opinion, I do not suggest jumping in thinking that you're going to make all kinds of money, okay? This doesn't happen overnight. You really have to put time and effort into the market to learn it. You know, if the market was easy, everybody would be doing it. So that's not the case, okay? It takes a lot of hours of research. It takes a lot of time learning, charting, learning different indicators, learning potential reversals, learning all that stuff that goes into making money fast. That's going to take time. So while you're trying to learn all those things, you're trying to get the most out of your money, of your return of your investment, I honestly believe, in my opinion, that doing dollar cost averaging is the way to go, especially in a red market. Okay, if anything, I'm actually doubling down right now. This is when it's red like this is when I'm like, all right, let me add more to my position, right? Because as you see, you know, Starbucks is actually above my average cost, but say my average was 87 instead of 84, I should be buying in more because it's going to bring that average cost down, meaning I'm getting more of a return. So again, guys, I wanted to just make a quick video of a different strategy to use while in a red market. It's going to seem like it's not promising at the time, but once you start seeing green again throughout your portfolio, you're going to realize how crucial those moments were when you were still adding money into the market when it was red. If you guys have any suggestions, if you have any questions, if you have any comments you want to say, go ahead and leave it down below. If you think I earned your thumbs up for this video, if you learned anything new, please hit that thumbs up button. And of course, as always, remember to keep green, to keep classy, and to always make your moves with kinetic knowledge.